Hello, everybody. How's it going? Can you hear me? Good, good, good. All right. Here we go. All right. Good day. Ed Ponsi here, your FX educator here on behalf of FX Street. Once again. And the dairy auction, we already have the results, and it's not a market mover. Looks like the dairy auction did not move the market at all. I'm going to show you here. If I back up, you can see that we set up a buy and a sell, and the price just didn't move at all. I'll go back to the 60 minutes so you can see the lines, but it budged, barely budged. Here's your results. Global dairy down 3.2%. Just did not move New Zealand dollar at all today, right? And you know, you just never know what you're going to get, and you never know exactly when it's going to hit. It's kind of funny how that works out. Looks like the big move was in whole milk powder, right? But most of these barely moved, right? And so whole milk powder making the big move, and you just never know. Not only do you not know what's going to happen, you don't know when it's going to happen. The auction results do not occur at a specific time. And people say, well, why is that? Why don't the results come out exactly at a specific moment? And the answer is because it's an auction. And, you know, an auction could end quickly or it could go on for a long time, and nobody knows how long it will go on. So we don't know when it's going to end, and we don't know. But as soon as it ends, they let us know. They let us know the results. So that's probably the best way. That's better than sitting on the information, because when you sit on the information, you know, it tends to get corrupted, and it's best to just release the result as soon as it's available. So it's actually best to do it this way. But in this case, it had very little impact. So much for the New Zealand Global Dairy Trade Auction, but we will see that again 2 weeks from today, so maybe we'll set something up again in 2 weeks. We shall see. Okay, let's get back down to business. So let's let that go. We're going to talk about some other information that came out earlier. We did have today's our big PMI day here all around the world. We had in Europe, PMI numbers came out mostly green. Market services PMI. Here, let's hit out for today. Right, a lot of green PMI numbers. France being the exception here, manufacturing PMI just being slightly weaker than expected, but market composite PMI in France much better than expected. Services PMI, France, much better than expected. Germany, composite, much better. Services, much better. Germany, manufacturing, much better. Much better. Overall, Europe, slightly better. Services overall, much better. And composite overall for Europe, much better. So what's this really mean? You know, we talked about PMI being a leading indicator. And we talked about China having a really strong export figure last week. I think it's not necessarily unrelated. I think you're seeing global improvement, and I think you're seeing global confidence improving. We know that a lot of the indicators in the U.S. are coming out stronger than expected recently. And if China's exports are going up, that means countries outside of China are ordering more things. That means Europe is buying more. That means the U.S. is buying more. I think you're seeing the beginnings of a true global economic recovery. we've been hearing the words economic recovery for many years now. But when you have countries with 0% interest rates all around the world and even negative interest rates, it's kind of hard to make the argument that the economies of the world have really recovered. But I think you're beginning to see, for real, a true economic recovery now for the first time. And this is a manifestation of that. Services and manufacturing. If manufacturing is coming out ahead of expectations, that means they're hiring people, that means orders are coming in. And of course, services, perhaps even more important, because the developed economies are services economies. Manufacturing tends to take place in the countries that are willing to do it for less, in places that are willing to do it for less. Services economies are the more developed economies. Think about this class. This is a service. We're not manufacturing a product. This is a service, right? This event that we're all participating in right now is a service, not a manufacturing event. It's a service. So services are more developed, manufacturing less developed. And so really we think about services as being more important, but in Germany, manufacturing very important. Look at that 57 number for Germany. That's really strong for manufacturing. That's very, very impressive. Okay, so we like those numbers, and we still have numbers coming from the U.S. In 30 minutes, we're going to see some manufacturing PMI and some services PMI in 30 minutes from the U.S. And we're going to hear from some Fed speakers because, what would it be if we didn't hear some Fed speakers? And what are they going to say? They're probably going to say that 3 interest rate hikes is probably what we're going to get this year. They're probably going to say that we could see a rate hike in March because that's what the type of things that they've been saying lately. So that's what I would expect. Okay. There you go. Also, later today, that may be interesting is that you're going to hear from Philip Lowe. Philip Lowe. So I know we've been talking a lot about Aussie lately, and Philip Lowe is now the RBA governor. The only reason why I find this interesting is because he's fairly new. And when you have a new governor, when you have a new head of a central bank, you kind of got to feel that person out a little bit, get a feel for how they operate. So it's always interesting when there's somebody new in charge. And so that's the situation we have in Australia. So RBA, that's 7 hours off. But if you're trading Aussie, you don't want to ignore that. And I'm certainly got my eye on Aussie. Tomorrow, I won't be here with you tomorrow. I will be here with you on Thursday. I think British pound GDP is going to be interesting. I'm staying away from British pound, though, for now because we have this situation in the UK right now with the House of Lords and Brexit and all of the related drama, which could create a lot of activity and some potential for gapping intraday. I'm just all the political drama. We've seen so much of it in 2016, and I'll tell you, for every person who brags about how much money they made on Brexit, there's 10 who don't say a word about how much they lost. I hear a lot of stories from the inside, from different people inside of brokerages about destruction of people's accounts during Brexit, and you just don't want to know, and just avoid the major events. They tend to draw people, and you just want to stay away. Okay, so I'm staying away from the pound for now, just until this House of Lords things blows over. We'll see how it all shakes out. Do you know why they changed the name of WTI on Bloomberg to NYMEX crude oil? You know, Henley, I'm not aware of that, but NYMEX and WTI are not necessarily the same thing. NYMEX refers to the New York Mercantile Exchange, and WTI refers to West Texas Intermediate. So those are not necessarily the same thing. Now, I'm no oil expert, I'm no futures expert, but those are not necessarily the same thing, so be very, very careful. I'm a Forex guy, I'm not a futures guy, so I'm not really qualified to say anything else about that, unfortunately, because I don't know. I just, hey, you got to know what you know and know what you don't know. I don't know what's up with that. But I would say this. There is such a thing as NYMEX crude oil, and there is such a thing as West Texas Intermediate. And I guess Texas is a 4-hour flight from New York. So, you know, NYMEX, is the NYMEX even still open? I mean, the floor of the NYMEX, I thought it was closed. But I guess it could still be a computerized exchange, even if there are no more floor traders. I'm just babbling now. Don't mind me. Let's get to some charts. Okay. Anyway, GDP tomorrow for Britain could be exciting. And existing home sales is something that I always watch with excitement in the U.S. Ooh, FOMC minutes tomorrow in the U.S. too. So actually, there's quite a few things tomorrow to keep an eye on. A lot of data tomorrow. And crude oil stock. That's always interesting for a trade. If you want to place a quick Canadian dollar trade, fade the move based on crude oil inventories. Kind of similar to what we attempted this morning with the New Zealand trade, and I would cancel those orders, folks, for New Zealand that we placed today because that trade simply did not trigger. But something similar tomorrow with Canadian dollar and crude oil inventories could certainly be a possibility. Okay? All right, let's get back to work here. Let's get back to the charts. We talked about kicking this session off with some Aussie New Zealand. And look at that sucker go. Aussie is just en fuego. And I gotta tell you, iron ore prices are something, this is something that keeps popping up in my feed. Prices are soaring. 94, almost 95 per ton as of 3 hours ago. I can't pull up a chart of iron ore, unfortunately. But iron ore is flying, and it's one of the biggest exports from Australia to China, which again leads me to believe that something very good is happening in China. Iron ore is up over 100% since the start of 2016. I'm sorry. Certain grades of iron ore are up over 100%. Other grades are up more than 50%. Again, I'm not an iron ore pro, but iron ore prices are jumping. That much I can tell you. I can't pull up a chart of iron ore, but I can pull up a chart of copper. Is copper playing along? Kind of, sort of. We had a false breakout out of this triangle, and now it looks like it's trying again. That's copper, continuous contract. Okay. Meanwhile, some of your biggest copper producers. Here's BHP Billiton. I'll show you the weekly. They own the world's biggest copper mine, Escondida, in Chile. But they also have extensive operations in Australia. And FCX, Freeport-McMoRan, big red candle yesterday, Friday I should say, but overall this stock's been climbing too. They also have extensive operations in Australia and around the world. I gotta say, again, this is really good news globally. And it looks like trying hard. I've said this is going to be a tough nut to crack because of all these wicks, but look at it. It's in there. It's trying to work its way through. Look at this zone of wickage. Much wickage, folks. Tons of wicks throughout this area. Look at all these wicks. All right, which means every time the prices come up here for the past, looks like 8 months, it gets smashed back down, and we're in that area again. But technically speaking, this looks like it wants to go. Let me show you what I mean. There's a technical pattern in here called a flag that looks pretty bullish. I'm not saying it's going to be easy. Well, let's forget about the flag for a second. Look at this line that was left in here earlier. This clearly was resistance, and now it is support, right? You see how this was here? Let me get closer for you. See these 3 candles here? Resist, resist, resist. And it breaks. And then you get maybe 3 or 4 candles where it becomes support, support, support. So resistance over here very clearly becomes support over here. So far, so good, right? So we all see that. But there's more. But wait, there's more. Right? There's more going on here. Look at these last 2 candles, man. This thing jumped off of this. It flew off of that support level. Now, some people would say, I think it's a stretch to say that this is your flagpole, because that would say it's going to 110. I mean, to measure your flagpole from here would be a stretch, especially because of this doji. It's kind of a gravestone doji sitting right here. But you're in a crucial area. And I think if you can push through this area, then I think you're going higher. Could be going a lot higher. Think about this. It's the battle between 2 commodities. Hard commodities and soft commodities. So the battle of 2 types of commodities. So think about it fundamentally for a second. Battle of hard commodities. Everything that comes out of Australia is a hard commodity. You would not want to get hit with anything that comes out of Australia. Iron ore, coal, copper, gold. Okay, you can hit me with gold. It'll hurt, but it'll be worth it. Okay. Hard commodities versus soft commodities. Milk, cheese, lamb chops. The price of the hard commodities is rising. I showed you the copper chart and I told you about iron ore. Gold. We've shown you gold before. Look at gold. Gold is rising. Iron ore is rising. Copper is rising. I have no idea what coal's doing, to be honest with you. But it seems like everything that comes out of Australia is rising. We just learned an hour ago that dairy is falling. Dairy fell 3% in the most recent auction. Dairy's the biggest export in New Zealand. It's almost not fair from a fundamental standpoint. It's Mike Tyson versus Sister Mary of Our Ladies of the Poor. It's not a fair fight. Okay? It's strong, hard, strong commodities against weak, soft commodities. I think you got to buy the dips. But there's no way I'm buying it here. Because right here is the place where the sellers have been camped out since May. Tyson versus I'm just trying to, in my weakened state, I'm just trying to come up with the best analogy I can. When I'm making jokes, I'm beginning to feel a little bit better, right, folks? I am beginning to feel a little bit better. Okay. So, anyway, I can't buy it here, but I would definitely buy the dips strictly on even like the technicals and the fundamentals. The technicals say you got to buy it lower. The technicals are saying, if you're not in it, right? And I know that Carlos is probably in it because he's been talking about it for a while. He's not. He says, okay, no, I'm not, says Carlos. And kudos for honesty, right? But we've been talking, I'm in Aussie yen. I can't be in Aussie New Zealand and Aussie yen. It's actually, technically, it's a short here. And I was thinking about shorting it here. But fundamentally, I can't. I can't short it here. Why was I thinking about shorting it here? I was thinking about shorting it here. First of all, you can't go long Aussie on all. Sorry about that. You can't go long Aussie on all your trades. You can't go long Aussie yen, Aussie USD, Aussie New Zealand, Aussie this, Aussie that. You can't go long Aussie everything, right? And I'm already long Aussie yen, as we have reviewed. And if you missed it, go to our first session today, which is archived, or go to yesterday's sessions, which are archived, and check them out. But it's well documented. I'm long Aussie yen, and therefore I couldn't really buy this because I don't want to stack the deck. I don't want to turn my account into one big Aussie trade, because then if there's bad news in Aussie, what happens? I get crushed, right? And then the whole account goes against you and you end up getting pounded. You can't let that happen. All right? It's bad risk management to allow something like that to occur. But fundamentally speaking, I can't short it because the fundamentals are too strong in favor of Aussie. And really, they're just not. New Zealand just doesn't look like it's putting up much of a fight here. The technicals say buy it lower. We're currently at where? We're currently at 107.26. Technicals say buy at 80 pips lower, if you can, if you get a chance. Buy a dip if you get a chance. But this whole zone, and this zone goes all the way up to where? About 107.75. I think if you can get above 107.75, then you're also in the clear up there. Because anyone who's selling it in this yellow zone, once it gets above 107.75, I think they're done. I think they're done selling. Clearly, once above 108, this thing's in the clear. And look at this lightning move down from 112 to below 110 means there's no resistance in here. This area from 112 to 109 has no resistance. So there really is a lot of potential here. But I'm just not a buyer at this point. I just can't trade it right at this point. Fundamentally, I can't short it, and technically I can't buy it. But it is fascinating, isn't it? Anyway, I got to say, though, I am very pleased with the fact that Aussie's iron ore is rocking. And I think that says good things about China. And I'm keeping a close eye on copper. They call it Dr. Copper, right? Because it's more than just a metal, it's an indicator. And if copper, I'll show you copper one more time, right? It's an indicator, and there it is, trying to break again. This was your false breakout, your pullback, and it's trying again. That's a pretty big ascending triangle. And it's a consolidation after a very sharp move higher. When you get copper and iron ore moving together, and China's economic data is beginning to improve, and U.S. economic data is beginning to improve, and European PMIs are looking better, I gotta say, I'm beginning to feel a little bit better about the world around me. How else can you frame it? Right? Carlos says, going to set my stop below 106.28. Take a chance targeting 108.40 target 1. Wait to see if it drops to 106.35. Carlos, playing it very smart, in my opinion. This is not the point to buy Aussie New Zealand. I think you wait to buy it. You wait to pull back to that line. That black line there I think that's your area to buy. Very smart, I think. And if it doesn't pull back, there's always going to be another setup. So you don't worry about it. All right, gang. Great sessions again today. Thanks for your participation. And let's do it again on Thursday, okay? Watch out for those Fed minutes tomorrow. And for UK GDP tomorrow, watch out for the House of Lords. And for that Brexit discussion that's ongoing. And I'll speak to you again very soon. See you on Thursday.